Welcome to RealCast, the weekly roundup of the real asset markets. My name's Richard Betts, and I'm joined by Nicol Dynes, Paul Strome, and special guest Nick Axford of Avison Young. Let's start with the news. Paul, what have you been following this week?
It's noticeable that with the arrival of the vaccines, people are looking beyond COVID and are thinking in terms of making up lost ground, particularly investors who have been slowed by travel restrictions, and in a lot of instances we're hearing about a lack of suitable stock. In a report last week, Savills declared that 2021 will see increased volumes of global capital investing in Europe. They say that despite the further travel restrictions imposed in the current quarter, there are increased allocations to real estate aiming to capitalise both on appealing yield spreads compared to government bonds and the trend for partnerships between non-European capital and Europe-based investment managers. So while European money will still be focused on local opportunities, Savills expects non-European capital to lift the region's cross-border investment by 10 to 15% year on year. The firm points out that as sovereign bonds offer near zero returns, real estate looks very favourable, and European markets are attractive because of their relative macro stability. As to the favoured sectors, while beds and sheds investments took a larger share of investment from cross-border players in 2020, Savills predicts cross-border capital will target all sectors, from offices and logistics to the more emergent sectors, life science, healthcare, data centres, and more opportunistic players may consider retail and hospitality. Back to logistics for a moment. CBRE conducted a European logistics occupier survey in conjunction with Analytica. They found that, unsurprisingly, COVID-19 remains an important consideration for occupiers and will continue to drive demand for space in Europe. 47% of respondents highlighting a long-term need for flexible storage space. Interestingly, the survey also found that 50% of online retailers in Europe believe they will need additional logistics space in the UK as a consequence of Brexit, with a further 40% suggesting they'll also need additional space in the EU. And as the discussion increases about the return to offices, it was interesting that Cushman & Wakefield this week said it was considering launching its Indigo flexible workspace solution in Germany. The firm has recruited former WeWork European property chief Heike Himmer and aims to have decided by summer 2021 whether to launch the service. The tentative nature of the announcement was as interesting as the announcement itself. I thought that the firm is perhaps balancing up the prospect of increased demand for flexible offices against the struggle that flexible office operators will continue to have until we can return to the office. And that struggle was demonstrated by the Chapter 11 bankruptcy of Knotel in the US. Presumably, it's a question of timing for Cushman.
Also interesting to see that weight of capital seems to be an ongoing topic. Swedish pension fund AMF posted a 7.1% return for last year, which was in line with its 10-year average. And Thomas Floden, AMF CIO, cited the fund's increasing alternatives weighting as one of the key successes in 2020. So that suggests kind of no let up in terms of capital targeting real assets. And interesting also that point around healthcare, because I saw in the news as well that Swiss Life's healthcare fund diversifying into Spain and Italy. And Nick, you shared your 10 key themes for real estate for 2021 as part of the discussion with a great panel. What were your key takeaways?
As Paul was discussing, and you mentioned with him, there was a big area of interest and discussion around this whole area of working from home and flex, and what do the experiences of the last 12 months tell us about the future of the office sector, for the way office space is used and laid out, and the shape of portfolios on the part of occupiers, which obviously plays into that. Some of the wider pressures that are emerging on and out of business and society as we look to the recovery, the concept of kind of building back better as we look to move forward, hopefully post-pandemic, what's that going to look like and what are the key drivers going to be? In a real sense that, whereas perhaps in the past, ESG and climate change, the type issues are very much top of the cycle issues, but as soon as people come under pressure, they get forgotten. That maybe this time it is different. Maybe this time, we have seen ongoing interest, and that clearly is going to play through in the way in which people look at real estate as an asset and look at the way particularly corporate occupiers are working and behaving. And I think, the comment that really struck me was one made by Kim Politzer of Fidelity, who made the really important point that we need to be wary of the fact that we are very much looking at what's going on now through the lens of our current experience, that we're still living through it. And it's really easy to kind of get a bit carried away in thinking that of revolution and everything is going to be completely different, or even that, the way we move forward is very definitely going to look very similar to the way things are today. We should be aware that we're right in the middle of something pretty big and pretty dramatic, and that we should just accept the fact that it's going to take time to play out, and probably some of the things that we think of maybe are more direct influences or impacts that we're seeing right now are likely to moderate as we go forward.
I thought it was really interesting, Nick, as well, that idea about what are we measuring that you introduced there, but how we actually measure value and those kinds of things moving forward.
It links back to that ESG point. I think most organizations now would argue that making a profit is still important, but not at any cost. And as organizations, we all have to look at ourselves and recognize that we have a duty to society, and that the impact that we're having on society and the impact that we're having from a climate on the planet perspective is an important part of thinking about the success of our business. In which case, why isn't it true that the metric we use to judge success at national level are more rounded and do the same thing? GDP only measures one aspect. Maybe we should be looking at a broader measure of something that takes into account our progress on dealing with some of the social equality and other issues that have been so dominant in the headlines over the last year or two, and also the big picture climate issues.
I thought also those green issues really came through, and that was hit a little bit in the news lines as well. I saw Atrium's inaugural green bond was in high demand from investors. Nicol, number of these themes also came through in the other events over the past couple of days as well.
Yes, Real Asset Media held two of its Outlook 2021 events, one on the Netherlands and one on France. And on what you were just mentioning, in fact, Berlin HIP said that they are, obviously banks are being very conservative at the moment, very risk averse, but they are prepared to finance projects that have green credentials. And in fact, in France in particular, it was highlighted that there are great value add opportunities. There's a huge number of obsolete office buildings. Obviously, the office sector has always driven the Paris market. So the CBD is still strong. And but the focus is very much on these value add opportunities, which can find financing. That side of the market seems to be very lively at the moment. And obviously, the other two sides, as we know, are residential and logistics. And but the interesting thing in France, on the France panel, I thought was again, we've seen it in Germany as well, the emergence, the strengthening of domestic investors. They've always been strong in France, but in just 1 year, last year, they went from 66 to 68%. So really sort of took a strong hold on the market. But also, interestingly, the Germans have always been there, but they've increased their presence in France. And the Canadians have really invested strongly last year, while Asia Pacific investors virtually disappeared. When it comes to the Netherlands, again, the GDP was not very much hit by COVID in the way that it was in France or the UK. But obviously, there's less, because there was less of a fall, there's less of a bounce back factor. The market held quite well. Again, offices were badly hit. But looking ahead past the vaccine phase, there's a lot of optimism, especially in Utrecht and Amsterdam. In the CBD, core offices will continue to do well. But it's very much a logistics story, because of Brexit as well, partly because of the reshoring trend. Obviously, companies, rethinking their supply chains after the pandemic, and the Brexit effect that many UK and international companies who sort of woke up a bit late, maybe, to the fact that they needed to have a presence on the mainland, in mainland Europe. So they were really scrambling in the last few weeks to find space. And they were pointing out that the Netherlands still has opportunities, still has space, unlike Germany, which is where it's very, very difficult to find space for a new logistics development.
Yeah, it was interesting also that Dennis Schoenmaker mentioned the debt gap, and the following day React News reported the awakening of the UK NPL market with the launch of a 550 million distressed portfolio. And so this looks likely to be a theme for 2021. Thanks, Nicol, Paul and Nick. And you can access the full presentation from Nick along with the panel discussions on our website. Thank you for joining us, and look forward to seeing you next week for our regular roundup of the real asset markets. Thank you.